So, thank you very much for joining us again here on the Digital Dividend, Fasanara's podcast, where we shine a light on some of the most interesting and innovative non-bank lenders in the fintech lending landscape. And today, I'm here, Matt Koos, the head of origination for developed markets at Fasanara, along with Shreya Thumar, an associate from the origination team. And we're joined today by Neri Tollardo from Plata. Neri, thank you so much for coming on today.
Thanks for having me. Good to see you.
And so, Neri, if you had to summarize Plata's business model in just one sentence, how would you do so?
Great question. I would say our business model is to be a credit-led digital bank. So we did start with a lending product, a credit card, which is called Plata Card, but it comes more than just a lending product. The goal is to be a one-stop shop for all financial needs of our customers. So once we start with lending, then we will also be expanding to other financial products. And that obviously means having a lot more focus on the user experience, on the technology part, on the front end, than I would say most traditional pure lenders.
Thanks, Neri. Can you talk to us a little bit about why you decided to build Plata, with whom, how did you start out? Give some background to us.
Sure. So I started my career at Morgan Stanley, where I worked for 8 years, always covering emerging markets. So I've always had a passion for countries that still had everything to do, where the opportunities seemed always much bigger than in developed markets. So I started at Morgan Stanley, then I moved to a digital bank called Tinkoff, which was actually the first ever digital bank in the world, also credit led, where I was head of strategy there for a few years. And then we all know what happened in Russia in February 2022. And so myself and a few other executives from Tinkoff, we wanted to try something else. We wanted to cut ties with everything that was going on over there. And so we rolled out the map of the world, and we had a look at what other emerging markets we could bring our expertise and our know-how. And Mexico was one of the countries that we had started to look at for a number of reasons: macro, micro, state of the current financial sector. And so in the summer of 2022, we left Tinkoff and we started a separate project with new investors, new funding, and moved to Mexico to start building a digital bank. Again, credit led to start for a number of reasons, which I'm sure we will discuss on this podcast. And at the same time, building all the IT infrastructure, the mobile app, and everything that you would expect from a player that wants to be not just your credit provider, but also your broader financial services provider.
Neri, that's super interesting, and I think already brings to light one of the things we were most excited about when we first met you in Plata, which is that on paper, of course, you're very much a startup. You still have the startup mentality of building something big and beautiful and being the best, as well as pushing really hard to hit financial KPIs. But from our view and from the credit perspective, more than anything, we saw you much more as a well-established, or rather a team coming from a very well-established credit lending background. Keeping that in mind, because you did essentially branch off from what was a super successful, kind of largest ever credit card lending business in Russia. Could you maybe talk through some of the challenges that you faced at outset, which I think were probably a little different than some of the challenges some other people face when they're first starting a startup, maybe that were more specific to coming to a completely different market and bringing over a team from maybe people who are located all over the world?
Yeah, it was definitely a different trajectory to most normal startups. We first started with a significant amount of equity funding, leveraging on the experience that we had. When they saw that a group of highly qualified executives was willing to try again somewhere else, it was relatively straightforward to find these large investors that enabled us to basically go out and build the end state of where we want to be: the banking platform, the product, the team, the license, etc. We had, on the one hand, the advantage where we were able to put a team together very, very quickly, because we were able to bring on board a lot of people that we worked on and that were, the creme de la creme
Yeah.
of the credit lending space, where we used to work. And so the forming the team actually was probably a lot faster than it would have been had we moved to Mexico and then started looking purely on the market for all the roles that we needed to fill. Now, of course, we had to look for local talent as well, people that understand the regulation, the customer preferences, um, the payments infrastructure, etc. But because we're not doing this for the first time and we have all this experience, it was relatively easy to find to identify the people that really knew what they were doing. And so we brought on board some amazing local talent that helped us really kickstart. And of course, at the beginning, one of the biggest challenges was figuring out where everyone is going to be located. So our
Yeah.
IT is not based in Mexico, it's based in Europe. We have an office in Cyprus, a very big office, an office in Barcelona, and then everyone else is a little bit spread out. And so figuring out that logistics of how we're going to work from Mexico but have IT outside of Mexico, that was an interesting challenge, which I think we've resolved, and it's working very well. And then, of course, once we can talk about the difficulties of launching a lending business. We knew a lot of what could work somewhere else, and we had to adapt it to the Mexican market. So it was about getting started. It was about analyzing what was going on and making decisions very quickly in order to change the product, the channels, the monetization tools. And I'm sure we'll talk about it in a lot more details. One thing that was definitely also easier is that we definitely knew a lot of things that we shouldn't do,
Yeah.
which
So you had
have been said
lessons learned. You had things not to do.
getting things right is almost as important as avoiding big mistakes, because they can be very expensive. So that was definitely something that helped us out at the beginning, because we avoided a lot of pitfalls that I think a lot of first time lenders would have encountered when getting started.
And that's again something that from our perspective and from a team here at Fasanara, who's now over 13 years, due diligence 1,400 lending models. It's something that shines bright. Is essentially when you speak with a team and when you speak with someone who's developed their strategy based on lessons learned, based on real outcomes, having a track record around an underwriting model, a sourcing model, and getting a team in place to run that model. You mentioned earlier that when picking the jurisdiction, kind of we're looking at what market was kind of the right model for the next digital bank, and that you saw as most interesting. Could you go a little bit more into detail on why Mexico? Because I think we like the opportunities we see in Mexico, but could you maybe speak to from a lender's perspective and someone who just basically built a very successful business there, why Mexico?
Yeah, there's a number of reasons, both at the macro level and more at the micro product level. So obviously, building a digital bank is a business of scale. You need to make a lot of investment in IT, in product, and so you need a country that is of a relatively large size. So of course, when we started looking, as I said, we rolled out the map, and you run into the usual suspects if you're looking for size. You're looking for 100 million plus people. You look at Indonesia, you look at India, Philippines, Brazil, etc. Mexico definitely fit that category, and it's a very advanced market, in spite of labeled as emerging. It feels much more advanced than a lot of other emerging markets. So it felt like one with size and where we could get scale. Now, of course, with the lending background that we came in with, we wanted to make sure that we could actually start quickly and start generating positive margins and making money relatively quickly. So the first is a regulatory question, which was very attractive, because in Mexico, you don't need a license in order to do lending. If you have your own funding or your own wholesale funding, you have an LLC, you can go ahead and lend it. Where it gets regulated is when you start taking deposits to actually lend those out. But that means that we could launch very quickly, because we did not have to go through a regulatory process to launch a credit business. And second, also the regulation around lending was also relatively favorable. Among everything, the ability to charge interest rates freely, which is not an obvious an obvious setup. A lot of emerging markets have rate caps or very strict rules around that. And it's not that we want to charge high interest. Is that when you get started, you have relatively high losses, expensive funding, so you need to be able to make the economics work, and then over time, obviously, see where you can reduce that. So on the lending side, it felt regulatorily very attractive, economically very attractive, and with huge demand for it, because in Mexico to this day, 50% of people don't have bank accounts. Two-thirds of people never had access to formal credit. So there's a thirst for credit, which was obviously very attractive because it meant that there was going to be demand for our product. And then speaking about more broadly the business model and why we're here building not just a credit business but a much bigger digital banking business. The first thing was the quality of the average banking experience in Mexico. I think is 10 years behind where it should be, especially if you compare it to a Brazil or to, let's say, a Revolut or in Europe. There's a huge room to improve anything from the user interface to the customer service. It's just felt like we're getting deja vu from some of the countries we worked in before, what it looked like 7, 10 years ago. And that was definitely very attractive. And then there was a question about licensing, being able to become a bank or a deposit taking institution. And we're not there yet. We're working towards it, but at least there's a very clear path, and the regulator is open to that, which again is not an obvious setup. There are a lot of countries which are very protectionist, where getting licenses is practically impossible, and would have meant that the business we could have built would have been a lot smaller. So those are a few of the reasons. And then, from a personal standpoint, Mexico was a good place to live. If I'm going to move around the world and dedicate the next 10, 15 years of my life at least for a new project, might as well be in a place where I actually enjoy living and where we can attract talent.
Absolutely. I mean, I think you definitely. It sounds like you checked all the boxes with Mexico, and I would highlight that being able to lend to consumers without a specific lending license is something that's very unique. As usually we deal with a lot of lenders here in Europe who do uh, corporate or SME lending specifically to avoid the need to be a regulated lender from that perspective. Having said that, I think you already mentioned a few times that your view is from day one to be a digital bank, and that it's all about the longer path of a comprehensive financial services provider to someone, so more than just a lender. So has that influenced kind of the build out and view towards regulatory compliance, legal setup already at outset?
Absolutely. And you rightly said, the day we started developing the app and the credit card in September 2022, we started the process of getting a banking license and preparing all of the documentation, because ultimately that's the end goal. Again, we want to be more than just a lending business. And so we got started as soon as we could. And what it practically in practice means is that uh, everything that we've built or that we are building is pretty much already in compliance with banking regulation. That means that the KYC process is very thorough and very, we do checks of IDs in the government databases. We would be able to open full bank accounts, and we gather a lot of information, obviously, during these KYC processes. But then it goes all the way to leaving an audit trail for everything that we do. And I mean, I think you guys saw it when you were here. We're keeping track
Yeah.
of everything from the meeting that we have to all the data, because we know that eventually the regulator is going to come ask for that. That goes all the way to the IT infrastructure, security of data, making sure that everything is designed in a way to keep everything secure. So it meant that we had to do a lot more investments in the sophistication of the business from the very beginning. We couldn't just improvise. We had to build out all the infrastructure and make sure that everything was done properly, which is obviously more challenging to start with. But at the same time, I would actually argue that it's better to get that done at the beginning than act as a non-regulated entity for 2, 3, 4 years, and then one day go up to your team and say, okay, from now on we have a compliance department, an audit department, and these guys are going to be, on your shoulders every day. Better to get that out of the way and everyone adjusted to it at the very beginning. And it also builds a very different corporate culture, because again, it just becomes a given that we have to act in a certain regulatory environment. And so when we become a bank, it's going to be a very simple transition. We're not going to have to do much different.
Thank you, Neri. We definitely did see all of that in our due diligence as well, and it was a very positive experience. Can you talk us through maybe from a customer's point of view, like what is Plata's USP?
Yeah, so the first thing I will say is that there's not a silver bullet in banking. So there's not one thing that we do well that gets us all the clients and gets us all the loyalty, right? Banking is very sophisticated, credit on all the more. And so you have to think through the entire user experience and make sure that every step of the way you have your USPs. So for us, it started from obviously coming to Mexico and understanding what types of credit cards are there in the market, what kind of value they give to the customers. Can we provide something that's differentiated? So from a product standpoint, immediately it was giving cash back to customers and making it a bit more interactive with giving customers the ability to choose their cashback categories on a monthly basis. It was giving a slightly longer grace period for those customers that would use the credit card as more of a borrowing product as opposed to a transacting product. Um, Being able to transfer money from your credit line, which is something that no one was doing here, or allowing customers to defer their payments into installments, basically giving a very rich product that actually allows people not just to go and spend money on their credit card, but actually to manage their finances somewhat. So that was obviously the starting point. Then we were going to provide that in a much better app. So our app is way better than anything else here on the market. It's much faster. It's updated every 2 weeks. We do releases every 2 weeks. So it's actually, it's very rare to say for a financial institution, but it's actually an enjoyable app to use. It's not something that at the end of whatever you're trying to do, you're frustrated because you just wasted 5-10 minutes of your life. So the user experience, the design, that's obviously something we spent a lot of time on. Speaking of design, our philosophy is to provide a premium product to everyone. We don't think that you need to have qualify for an American Express to have a good banking experience. Even if you don't have the same capabilities, you should be able to have a nice looking card that it looks good with a nice wallet that gets delivered in a beautiful packaging, to make the customer feel again loyal and feel like they want to be part of Plata, not just for the money we're giving them, but for something more than that. That's also very much related to customer service. We're the only app where there's a button on the front page that says support. You don't have to go through a labyrinth of options in order to look for someone to speak to, and even then, you will speak to a human that answers within a minute if it's chat, or 5 seconds if you call. So again, providing that user experience. All the way to actually the how do we deliver the product and how we do the KYC. We have this ambassador model, which means that when you get the card, you actually schedule a meeting with one of our employees, which comes to the time and place of your choosing, delivers the card, explains how it works, how to download the app, how to pay for your card, and actually performs the KYC, which is both a wow experience for the customer because we can deliver the card within 24 hours and actually help them on board physically. And also, it's very useful from a credit standpoint because we avoid a lot of questions around fraud and digital fraud, and stuff like that. So really, it's the entire user experience. Every step of the way, we sit down and we think, how can we make this notches better than anyone else in the market, and make the customer feel like, wow, that was really cool.
Well, I gotta say, this whole ambassador model, for me, this was really an eye opener. I mean, it was mind blowing. I mean, the first time talking to you about this and hearing that you have someone actually meet every single customer, and not just after completion of underwriting, but as part of the underwriting process. Which again, I think, as you highlighted, it's. I mean, the proof is in the pudding. We see in the numbers. Essentially you're getting underwriting data that helps you make a better decision on the credit line to give them, on kind of fraud flags. You're making a more prudent credit decision, but at the same time, people are feeling like they're attended to. And something that came up through our DD, and has again been proven in the data, is that it's helping you source more borrowers. So this was also something really interesting to me, was that more than one person shows up at the meeting, and then all of a sudden you have more than one applicant. Could you speak more to the success of this model and kind of how it was built out and how you see it as a path forward?
Yeah, so it comes from our experience at Tinkoff, because in Russia, I think to this day there is no digital KYC. So you have to either have branches or you have to have some kind of physical presence. And so the way Tinkoff used to do it, and probably still does, is that they had, at the time I left, 12,000 ambassadors doing up to 100,000 meetings a day, delivering cards and doing KYC. So it's a logistics business inside of the banking business. And we thought that that model could work really well in Mexico for a number of reasons. The first is that contactless penetration in Mexico is still extremely low. It's less than 10%. So you actually need the physical plastic if you want to really use the product. And if you're using FedEx or some of these other services, it normally takes 3, 4, 5 days in order to get it delivered. Because we run our own logistics business, we can deliver it within 24 hours, which is obviously a wow experience, but also has all sorts of benefits on the activation rates and utilization rates, because you're providing the product at the moment of need, or the closest possible to the moment of need of the customer. Then in Mexico, you still have lots of segments of the population that don't necessarily have that confidence in the banking sector or in new digital models. And so to have someone from the local area or environment that maybe you even know, and that they come to you and they explain the product, that human touch really does make a difference here. And again, we see them in our activation rates, etc. Um, Digital fraud is a big deal here in Mexico. We've had virtually no instances of that, because fraudsters don't want to meet in person, and even if they do, we have the opportunity of catching them, because our ambassadors are trained to recognize IDs, or to for telling signs that something might be off. And then to your point, now it's a little bit less relevant because we only have one product, but they become our sales agents. So during the meeting, they might, eventually be able to cross sell some different products if when we will have debit or whatever other products. But to what you were hinting at, right now in almost 70% of meetings, the ambassador collects at least one more contact that we can then reach out to and give a card to. And so the idea is that eventually this model could actually start paying itself, because with the customers that you onboard or the products that you sell, you actually end up covering the cost of doing this. Now, it's not easy to do. It took us, several months to get it up and running, because again, it's a logistics business. You need a certain amount of scale. You need to make sure that you're routing your ambassadors the right way. We had to develop the mobile app for our ambassadors, through which they collect the information, making sure that it's all safe, that the data is collected in a compliant way. And then you have to find, hire, motivate. These, the motivation scheme for these ambassadors is extremely complicated, because you have different things that they need to do, whether you motivate them for the quality of the service, but also how many customers they bring on board. So there's a whole science behind it. And it was definitely a big investment to start with. But for now, we're very happy with how that's going. And that's definitely one of our biggest USPs.
Okay. When you started building this app, were there any sort of unique changes in the ambassador model you saw in Russia versus in Mexico?
Yeah, did you have to adapt it at all, or
Yeah, definitely.
you
I
talked
mean,
about?
credit cards in Russia are predominantly a borrowing product.
Mhm.
So people, the share of revolvers, let's say people that pay interest, was 70-80%. Here in Mexico, it's the flip side. So you have maybe 30-40% that will pay interest, and the rest are what are called totaleros, or grace period customers, people that pay in full. And that makes the economic, if you're purely relying on an interest model where you charge interest to your customers, it becomes very difficult to monetize unless you're charging interest rates that are through the roof. It's
Yeah.
not as extreme as you see in Brazil, where interest rates of 400-500%, because only 10% of people pay interest, but it's still a challenge. And so for us, it was a matter of developing a lot of features and characteristics that would be appealing also to customers that don't use a credit card as a borrowing or a revolving product. They use it more as a transactional tool. And that obviously requires a lot of development and a lot of understanding of how to build digital products, because again, it's not just purely I give you money, you pay me interest. So that was definitely something that was a challenge, which I think we've solved in the first year. The other very interesting thing was the virality that we saw here in Mexico. So at Tinkoff, in Russia in general, credit cards are not really a product that you go out and recommend to your friends.
Yeah.
And so you have to rely a lot on paid channels and making sure that you're sometimes heftily paying for customers. What we've noticed here in Mexico, and I think it's partly cultural and partly again the fact that it's credit cards are used somewhat differently, is that within a week of us launching, we had organic bloggers writing about us and making videos about the product and say you should really get this, it looks really cool. And now almost 50% of our customers come through referral or organic. And that obviously speaks to the quality of the product that people actually want to go and recommend. But it's a general observation that we've seen that people here generally are more open and would recommend things to friends, colleagues, etc. And so that obviously had a huge impact on our acquisition costs and making sure that we can scale the business this quickly without excessive spend on acquisition.
Well, and I think again, from a funder's perspective, this shines through. This makes it attractive to have established what again we see as what will be a very wide-reaching and long-term relationship. But could you speak then to the actual growth you've experienced? I mean, would you be willing to share some of the numbers in terms of how many customers you've grown to and kind of
Sure.
total size of lines granted?
Yeah, sure. So we launched the credit card to the public in April 2023, so a little bit over a year ago. And as you can imagine, we took it relatively easy at the beginning. We were issuing, few hundred, a few thousand cards, collecting data because obviously we started with assumptions on what the risks and the economics would be. And then it was a huge work, not just in the risk team. I think, it's a common misconception that it's all about how you score your customers, but it starts with acquisition. Which channels are you in? What are your messages? Are they bringing the right population? Are you running into huge negative selection, or are you actually getting good customers? So starting from that, all the way obviously to the scoring, making sure that the data we're collecting, we can predict risks properly and accurately. Then understanding the economics of the entire product, so how much revenue are we making, and understanding is this an NPV positive customer, and then all the way to making sure that once the customer is onboarded, are you dealing with them properly starting from customer service all the way obviously to collections, which is hugely important, as you very well know in credit. But in the first, let's say 9 months until the end of the year, we made sure that we understood exactly all the interdependencies between these variables and these, let's call them steps of the credit process, to make sure that when we were spending money to acquire customers, then those customers had predictable risks and we were generating enough margin to actually build a business around it. So again, the first 9 months took it relatively easily, a few thousand cards every month, making sure we were in the right channels and optimizing those channels. And then towards the end of the year, we got enough confidence that the unit economics were in the right place to then press more on the gas and start acquiring customers, making sure that we were doing it with reasonable acquisition costs and with risks that were not deteriorating as you were acquiring more customers. So what that means is that after just a bit more than a year, now we have about 350,000 active cards or cards that have been utilized. But last month we issued 50,000 utilized cards. So that number is going to grow very, very quickly going forward. Our portfolio is around 75 million US dollars. And again, that's going to grow very quickly if we continue to issuing at this pace. So on our estimates, and this is not 100% clear because the definition of utilized cards is not clear, but we are estimating we're anywhere between 5 and 10% of all credit cards issued in Mexico every month right now, which I would say that after a year of operations is a very good result. Again, considering that we are doing it with very comfortable and strong unit economics, because obviously you could just open the gates and then it would come bite you later.
Exactly. Anyone can lend money out. Getting it back is the real art to it. And that's, again, something that we appreciated seeing, again, hearing about taking a prudent approach, not just opening the floodgates, but making sure the scoring and, more than anything, the behavior and collection and identifying patterns in payment behavior to identify ahead of time where you could make tweaks, where you could engage a borrower to make sure you brought someone back to curing was, going to work. And so, having said that, could you speak to any kind of, maybe, how big is the risk team? How is the team designed as a percentage of overall kind of employees within Plata? If you could speak to that.
Yeah, so for us, again, knowing that Mexico is a very challenging market to do credit, where there's very little payment discipline, there's actually a fair amount of data, but it's not always clean, and it's not always clear how it will actually predict risks. For us, it was extremely important from the very beginning to get on board the right people that could, with the right background on either statistics and math, to do the analysis of the data and understand the interdependencies between the various variable, but also on the IT side, because you have to collect a lot of information from various parties, and you have to make sure that you're collecting it in an efficient way where the system is, able to scale to, 20,000 applications a day that we get now. Because I haven't mentioned it, but we had 4 million applications since we started. So, you also need to build a system that is able to withstand such high volume and high traffic. So for that reason, we brought on board a fantastic risk team, which I always joke is a bunch of rocket scientists, and I'm actually pretty sure we have some rocket scientists in there. And the idea there is that it's a constant iterative process where you're optimizing the use of external data. You're optimizing the way you're spending that money to get that data at the right stages of the process, and you're calculating the unit economics or the revenues that you're getting from all those customers. So it's really amazing to see the mathematical brains and works behind it, because it's something that is definitely scarce here in Mexico, and that we've been able to source from our previous experience, and it's another one of our huge competitive advantages.
Okay. Was there maybe a new product or customer need or trend that you're seeing right now that you wanted to highlight to the listeners?
And also, speaking about MSI, I think is something, that's a concept that I think was pretty new to Mexico, at least in our experience.
Yeah, so it's quite common in Mexico to be able to go to a store and they will have these so-called meses sin intereses, or months without interest options, which are basically small installment loans if you want to buy a fridge, or if you want to buy something a little bit of bigger size, and it normally runs on your credit card rails, and those are merchant offered. What we've done, which has been incredibly popular, is actually build our own MSI engine, where the customer who may not be able to pay in full that month, or may want to budget their expenses because of their needs, can go into the mobile app, select any transaction above 100 pesos, and say, I would like to defer this payment 3, 6, 9, 12 months, because it will mean that it's more likely that I will be able to pay it comfortably, etc. And that's become a significant portion of our experience, and also obviously revenue of our portfolio. And it's very appealing to a specific segment, again, that may not be revolving on a monthly basis, but occasionally has the need of having to push out a payment for whatever reason. So that's been absolutely crucial for us, and it's something that we're now adding to all sorts of, not just purchases that people have done, but for transfers, for bill payments, again, allowing people to really budget their expenses based on their needs. And that runs on the credit card product. So you get access to that, well, with a credit card. Now, we are thinking about more lending products. We already launched a buy now, pay later product, which is now in test mode. The idea being that if you don't have a credit card in Mexico, or if you've run out of limit, it's very difficult for you to actually access credit at the checkout. And so the idea here is to provide a traditional installment loan that the customer can get, and then eventually maybe migrate this customer to other products like a credit card or other lending products or other financial products that we may develop later on. It's a bit more challenging here because it's B2B2C, and the moment you add a B in the middle, it adds all sorts of complexities and delays. But we're still quite excited about that opportunity. And then on the lending side, we're thinking about personal loans because again, in Mexico, it's quite clear that people don't always use the credit card as a borrowing product. It's more of a transactional product, but that doesn't necessarily mean that people don't have a borrowing need. And so to be able to offer other borrowing products to people that are already using your credit cards, that's also something that's quite interesting and that we're looking to scale hopefully in the second half of this year. And of course, once we have a banking license and all the debit products, then it'll open a huge amount of possibilities because you'll be able to cross sell lending products to your deposit base, and you will have a huge more amount of data to actually use in order to do credit scoring more accurately, and you will be able to acquire customers more cheaply. So that's when really you can get a completely different scale. So that's obviously something that I've been working on quite a lot.
I think the MSI, the fact that your card allows someone to make any purchase they've made with the card into then a multiple repayment installment loan, I think that was a feature that we saw as pretty unique and helpful. And again, facilitating someone, budgeting and using the product. And at the end of the day, from us, when we're looking at different lending models, we have to not just think of what is the USP, as a single defining thing. But as you said, it's the combination of the experience, the usability, the design, and then of course, from our perspective, the underlying credit approach that makes it attractive for us to fund. So from that perspective, I would ask, is there any kind of trend in Mexico that you've been seeing lately that you feel is influencing kind of next steps in terms of, you mentioned that there wasn't a really high prevalence of digital banks. I mean, is digitalization and the digital experience, is that really the main focus right now?
Yeah, so Mexico is a country that has lagged in terms of financial inclusion for ages. And even by Latin American standards, Mexico is extremely underpenetrated. As I mentioned earlier, something like 50% of people still don't have bank accounts, two-thirds of people have not had formal credit. And I think in part that was mostly two things. The first one is that there were a lack of new digital models that could be interesting and with a lower cost to serve and acquisition cost could go into segments of the population that were less served. And secondly, the fact that a lot of these players did not have access to reasonably priced funding, let's call it that way. And so that always limited them to certain segments of the population. But I genuinely think we are at an inflection point now because you are starting to see a lot of players get deposit taking licenses, which means their funding costs are lower. They can go and give a debit product to more people and eventually bring everyone onto a minimum level of digitalization or formal banking, after which it will be easier for everyone else to serve them and offer them credit or other products. So I genuinely think we're at an inflection point there. And it'll be amazing to see how that percentage of unbanked people will come down over the next few years. And obviously, we aim to contribute to that as well. On the challenging side, I would say that it's definitely clear that there's a certain part of the population that fintechs are more appealing to and that continue to ask credit and credit cards to various fintechs. And so, one of the things that we are spending a lot of time on is making sure that the customers that we have already onboarded are not overburdening themselves after we've onboarded them, and making sure that we check that their whole credit exposure is within reason. To make sure again, because the risks is that you give them a credit card and then they get five more credit cards, and then the credit scoring you did when you got them on board is not very relevant anymore. And so you may need to think of something else to do. So that's obviously something that we're very conscious about. Not something that we see extensively yet, but something to obviously keep an eye on. And that's maybe like more on the challenging side.
Sure.
So it definitely sounds, and from what we've seen as well, that you're building great product in the right market at the right time. So where do you see Plata going in the next 5 years? What do you see as the plan for Plata in the next 5 years?
Well, we definitely want to be a fully fledged digital bank. That means licensed with not just a credit card product, but it means a broader spectrum of credit products, including some of the stuff that I've already mentioned, whether it's buy now, pay later, or personal loans. Obviously, a broad suite of debit and investment products. So, current accounts, deposits, savings, maybe even some more sophisticated investments for certain segment of the population, which obviously means more customers, more data, and cheaper funding to really spread to all segments of the population. Um, Tens of millions of, I mean, if you tell me 5 years down the line, tens of
Yeah.
millions of customers, and obviously a very profitable business. We are not in the business of VC rounds after rounds, burning money and funding acquisition just for the sake of customer numbers. So our goal is to, aim for profitability towards end of 25, first half of 26, and therefore make our shareholders happy, not just in terms of market cap, which is obviously very market dependent, but also in terms of earnings and making sure that the business is sustainable, especially because we're going to be a regulated business. So again, we can, even if we wanted to, I don't think we would be allowed or could afford to not have a profitable, sustainable business. And obviously, right now, 100% focused on Mexico. We need to get Mexico right, and there's more things that I can probably think of that we need to do over the next 5 years to get that to the scale and success that we want to. But 5 years down the line, we may want to start having a look at other places around LATAM. Again, subject to Mexico being in a very good, solid, and predictable place.
Again, we're just very happy to hear it. I think people who've heard other episodes of this podcast are tired of me hearing that. I'm just happy when someone wants to stay focused and do something and do it really well before thinking of next necessarily jumping to the next market and the next market and the next market. And of course, you did speak earlier on to the size of the Mexican market in general as being one of the main reasons you located there. You do have space to grow, and while it is amazing that you're at 5 to 10% of credit card issuance now, we definitely see that getting up to 20, 25 and beyond in the coming years. So we're looking forward to that. While we do have you, I think, a lot of people who listen to us on these podcasts are also people who are thinking about starting less lending businesses, who may be early on in their journeys, and also thinking about how they can improve their functions within a lender they might work in. If you had to give kind of a single biggest lesson, and I know it's very hard to boil down years of learnings and thousands of lessons learned into one single, but if someone came to you now and said, what is the single biggest lesson you would want to pass along to someone else who's building out a lending business, what would it be?
Yeah, I would say, going back to something I hinted at before, is that there is no silver bullet in credit. So it's not just about the credit risk. It's not just about the collections. It's not just about the acquisition. You need to get all of that right. And you need to understand how the channel you're in affects the risk you're bringing on board and affects the type of collection that you're going to have to implement. So having the right people, not just in your credit department, but across the board, and making sure that they work in unison, which is obviously not an easy task, to make sure that, again, you're providing that across the entire experience. Everything is synced and you understand exactly how changing one thing here will affect you at the other end of the spectrum. That's really the only way you can build a profitable credit business, which means it's quite expensive to do. So try to raise enough money to do it, because it's going to be difficult otherwise to build all the infrastructure to actually get all those pieces of the puzzle right.
Okay, thank you, Neri. I think, any listeners who are building out businesses will find this really valuable. And so just to close, maybe if you can tell us, where can people find you? How can they reach out to you?
Yeah, I mean, to me personally, I spend a fair amount of time on LinkedIn, making sure that I'm up to date with everything. So LinkedIn is probably the easiest way to find us. Obviously, if you want to learn about the product and what we're up to, I put this up on purpose, which is one of our many billboards that we have around Mexico. So it's platacard.mx, just to get a feeling of the product, the design, and everything that we are doing. But yeah, feel free to reach out on LinkedIn. That's the easiest way.
Perfect. Well, thank you so much, Neri. We really appreciate having you here on the Digital Dividend. We appreciate getting some insight into Plata and what I'd say is thus far an extremely successful start to what we know will be a very successful business. So, thank you so much for joining us today, and we look forward to speaking again soon.
Thank you guys for having me. And I just want to also, maybe before we close, I also want to thank you guys genuinely for all the due diligence work that you did, because it was one of those moments where it put everything to the test, and to make sure that we had built something that was working and was reliable. And it was one of those moments where we said, wow, that's, it's pretty cool what we've built in a year and a half. So thank you guys for that.
For sure. It was a pleasure. Thanks so much, Neri. Have a good one.
Bye.
Bye bye.